Okay, so let's talk about this past week in finance.
Yeah,
It has been a wild ride, hasn't it?
it has been a crazy week.
Yeah, we've got the Fed doing its thing, whispers of a government shutdown,
Oh, yeah.
and even former President Trump making waves with talk of tariffs on the EU.
Always good to keep things interesting, right?
Yeah, you sent over a stack of articles about it all,
Uh-huh.
and it feels like every headline is screaming, market chaos!
Yeah,
So we're going to dive in to try to help you figure out what really matters.
absolutely. I think that's the key, right?
Yeah.
Cutting through all that noise and really focusing on what's going to have a lasting impact.
Exactly. And I think one of the things that really jumped out at me was this underlying story about inflation.
Yeah, inflation is the word of the year, isn't it?
Oh, it really is. It's impacting everything.
It really is.
Yeah.
I mean, it's affecting everything from consumer spending to business investment to the Fed's decisions.
All right, well, let's break it down.
Yeah, let's do it.
One of the articles from Reuters focuses on the PCE price index. Right.
Which, as you know, is the Fed's favorite inflation gauge.
Oh, yeah, they love that PCE.
And get this, it came in cooler than expected.
Interesting.
So maybe inflation isn't the runaway train everyone was worried about.
Well, that's the big question, isn't it? I mean, the PCE report actually breaks down inflation by sector.
Oh, okay.
And when you dig a little deeper,
Yeah.
you see that goods inflation, which had been a major driver,
Right.
is actually cooling down quite a bit,
Interesting.
which suggests that maybe those supply chain issues are starting to ease
Okay.
and consumer demand for goods is softening.
All right. I'm already connecting some dots here.
Okay, I like it.
The article mentioned markets bouncing back on Friday
Uh-huh.
with the S&P 500, Dow, and NASDAQ all jumping over 1%.
Yeah, pretty solid day.
Is that directly tied to this cooler inflation news?
You know, it's certainly a major factor, I think. When inflation cools down like that,
Mm-hmm.
it gives the Fed more breathing room.
Yeah. They've been aggressively
Have they?
hiking interest rates to try and tame inflation. All right. They've been on a tear.
But if it's easing on its own,
Yeah.
maybe they don't need to be as aggressive.
Exactly. That's the hope, at least.
Okay, that makes sense.
Yeah.
But here's where I get confused.
Okay.
The article also mentioned the Fed signaling earlier in the week
Uh-huh.
that they'd slow down rate hikes next year,
Mm-hmm.
and that sent markets into a mini panic.
Yeah. A little bit of a wobble there.
So good news on inflation, potential for slower rate hikes.
Right.
Why the initial freak out?
Well, it really all boils down to expectations. I think investors had gotten so used to the Fed's aggressive stance
Mm-hmm.
that any change, even a potentially positive one,
Yeah.
throws a curveball,
Yeah.
creates uncertainty, and the market really hates surprises.
So it's a knee-jerk reaction to a shift in direction.
Yeah, I think that's a good way to put it.
But by Friday, the good inflation news calmed everyone down.
Exactly. The dust settled and things started to look a little bit rosier.
Okay, and we see this reflected in Treasury yields,
Mm-hmm.
which actually dropped. So investors are now betting on what we call easier money down the line,
Yeah, that's the bet.
meaning potentially lower interest rates,
Potentially, yeah.
which makes borrowing cheaper and
Mm.
can stimulate economic activity.
Exactly. It's all about the flow of money.
Okay, I'm following you.
Good.
But let's shift gears for a second,
Okay.
because there's another piece of the puzzle that adds to this whole uncertainty thing:
Oh, what's that?
the threat of a government shutdown.
Oh, yeah. That's never good.
That can't be good for anyone.
No, not really. I mean, a government shutdown is like hitting the pause button on a huge chunk of the economy.
Yeah,
It disrupts essential services,
right.
delays payments, and just erodes confidence all around.
Yeah.
It's like adding fuel to the fire of uncertainty that's already burning.
Well, the article did mention that the House was trying to avoid a shutdown before the holidays.
Hopefully they can work something out.
But it's definitely a wild card that could throw things off course.
Yeah. Definitely something to keep an eye on.
Okay, one last piece of this puzzle,
All right, bring it on.
and it's a doozy.
Oh, boy.
Trump's comments about potential tariffs on the EU.
Ah, yes, the return of the tariffs.
The article said European markets took a hit after his remarks.
Yeah, that's not surprising.
Haven't we already been down this road?
It feels like we're in a constant loop sometimes, doesn't
Yeah.
it? But, trade tensions are always kind of simmering in the background of the global economy.
Yeah.
And they can flare up at any moment. And what's interesting here is that Trump's comments come at a time when Europe is already grappling with its own economic challenges.
Oh, like what?
Well, you've got the energy crisis,
Oh, right.
and then you've got slowing growth.
Right.
It's a tough situation.
So his comments are basically add an insult to injury.
You could say that, the thing about tariffs
Yeah.
is that they have this ripple effect.
Mm-hmm.
You know,
Mm-hmm.
they can disrupt supply chains, which we're still recovering from,
Right.
and they can drive up prices for consumers, which feeds back into that inflation monster we were talking about earlier.
Yeah.
It's all interconnected.
This is making my head spin a little.
Yeah, it's a lot to keep track of.
It's like a giant game of economic Jenga.
Uh-huh. I like that.
You pull out one piece,
Yeah.
and the whole tower starts to wobble.
And you never know which piece is going to be the one to topple it all over.
Exactly. And it highlights why it's so important to understand these global dynamics.
Absolutely.
What happens in one part of the world can have significant consequences elsewhere.
You know, it's a globalized world we're living in, and we're all interconnected, whether we like it or not.
All right, so we've got inflation data that's encouraging, but still a bit volatile.
Right.
The Fed trying to find the right balance with interest rates.
Walking a tightrope.
A potential government shutdown looming.
Looming large.
And trade tensions bubbling up again.
It's a recipe for uncertainty, that's for sure.
It's a lot to digest, especially for anyone trying to make sense of their own investments.
Yeah, it can be overwhelming.
So let's bring it back down to earth for a minute.
Okay.
What does all of this actually mean for you, the listener, trying to navigate your financial life?
Well, I think first and foremost, it reinforces the importance of staying informed, but not just passively consuming headlines, you know.
Right.
You need to understand what those headlines mean for your own financial decisions.
So not just reading the headlines, but actually
Exactly.
digesting them and understanding
Connecting the dots.
how they impact you.
Exactly. And take the inflation data, for example.
Okay.
If inflation continues to cool, it could signal a shift in the Fed's strategy, which could then impact interest rates.
Okay.
On everything from mortgages to savings accounts.
That's a concrete impact that people can actually relate to.
Right. It's not just numbers on a screen.
Yeah.
It's about the real-world cost of borrowing money or the potential return on your savings.
Exactly.
It hits home. And it's a reminder that you don't have to be a Wall Street guru to make smart financial decisions.
Yeah.
You just need to understand the basic forces at play and how they might affect you.
The article did mention that even with Friday's market bounce back, the major indexes were still on track for weekly losses.
That's true.
So it's a good reminder that short-term market fluctuations are normal.
Absolutely.
And sometimes those headlines can be misleading.
Oh, yeah, for sure. The headlines can really get you caught up in the moment.
Don't get caught up in the day-to-day noise.
Right. Stay focused on the bigger picture.
Focus on your long-term goals and have a plan in place.
That's the key. A solid plan can really help you weather those market storms.
A diversified portfolio is key here.
Absolutely. Don't put all your eggs in one basket.
Speaking of diversification, the article mentions some interesting movements in other asset classes.
Oh, like what?
Gold, for instance, surged after the inflation report,
Interesting.
but was still heading for a weekly loss overall.
So up and down like a yo-yo.
Yeah, what's going on there?
Well, you know, gold is often seen as a safe haven asset.
Okay.
Especially during times of economic uncertainty, when investors are worried about inflation or a potential recession.
Yeah.
They tend to flock to gold as a way to preserve their wealth.
So it's like a security blanket for investors when they're feeling jittery.
Yeah, that's a good way to put it. It's like that old reliable friend you can always count on.
And then we have the ever-volatile world of cryptocurrency.
Oh, yeah. Can't forget about crypto.
Bitcoin, for example, reversed its losses after the inflation data came out.
So it's back on the upswing.
It seems like it's always on a roller coaster ride.
Oh, it is always a wild ride with crypto.
It's fascinating how crypto reacts to the same news that affects the stock market.
Yeah.
But often in its own unique way.
Right. It's like it's got a mind of its own.
It's like a separate ecosystem with its own rules.
Definitely marches to the beat of its own drum.
Crypto is still a relatively new and unpredictable asset class.
Oh, yeah. It's still the Wild West out there.
And its long-term relationship with traditional markets is still unfolding.
It's a story that's still being written.
It's definitely a space to watch.
For sure. Keep your eyes on it.
But it's also important to approach it with caution.
Absolutely.
And do your research.
Knowledge is power, especially in the crypto world.
It feels like we're living in a time of constant change and uncertainty.
Yeah, it does, doesn't it?
Especially when it comes to finance.
It's a fast-paced world.
So much information coming at us from all directions.
Information overload.
How can people stay grounded?
Yeah.
And avoid making impulsive decisions based on fear or FOMO?
Right, that fear of missing out.
That fear of missing out.
It's tough to resist sometimes.
It is.
But I think it comes down to focusing on what you can control.
Okay.
You can't control what the Fed does or what Trump says
Right.
or how the market reacts on any given day.
Yeah, so much of this feels out of our hands.
It does. It can feel very powerless.
It's easy to feel powerless.
But you know what you can control?
What's that?
Your own financial plan,
Okay.
your risk tolerance, and your investment strategy.
So focus on what you can control.
Exactly. Take charge of your own financial destiny.
You can educate yourself about different asset classes.
Yeah.
Diversify your portfolio and focus on your long-term goals.
Those are the things within your sphere of influence.
Yeah, so it's about taking ownership
Exactly.
of your own financial well-being.
Be the captain of your own ship.
Love that.
Sail those financial seas.
And chart your own course.
To financial freedom.
Okay, so we've covered a lot of ground here.
We have.
From inflation and the Fed's moves to political drama.
Always a little bit of that.
And the ripple effects of trade tensions.
It's a complex world out there.
It is.
But hopefully we've shed some light on it.
I think we have.
And helped you make sense of it all.
And maybe even feel a little bit more empowered.
Exactly. Knowledge is power.
To navigate those financial waters.
So sail on, my friend. Sail on.
Okay, we've got to leave it there for today.
All right.
But don't worry, we'll be back next time to dive into.
Oh, yeah. We've got more to explore.
Some more of the most important
Absolutely.
financial topics of the week.
Stay tuned, folks.
Until then, happy investing.
And happy holidays.
Yeah, happy holidays.
All you. All right, see ya.
See ya. Yeah, no, a government shutdown is really like hitting the pause button on a huge part of the economy.
Right.
It disrupts so many things, essential services, payments, and then it just erodes confidence for everybody.
It just adds to that.
Yeah, exactly.
Uncertainty that's already out there.
Exactly. It's just fuel to the fire.
Okay, so the article did mention that the House was trying to avoid a shutdown before the holidays.
Yeah, fingers crossed.
But it's definitely a wild card.
Oh, yeah.
That could really throw things off.
Absolutely something to watch for sure.
Okay, one last piece of this puzzle.
All right, hit me.
And it's a big one. Trump's comments about potential tariffs on the EU.
Ah, yes, the tariffs are back.
The article said that European markets took a hit after those remarks.
Yeah, I can see why. Haven't we already been down this road?
It does feel a bit like deja vu, doesn't it?
Yeah.
Trade tensions are always kind of simmering beneath the surface of the global economy.
Right.
And they can erupt at any time. But what's interesting here is that Trump's comments come at a time when Europe's already dealing with its own set of economic problems.
Like what?
You know, the energy crisis is still a major issue over there.
Right.
And their economy is slowing down as well.
Okay.
So it's a tough time.
So his comments are basically adding insult to injury.
Yeah, pretty much. I mean, the thing about tariffs is they can cause a chain reaction.
Yeah.
You know, they can disrupt supply chains, which we're still recovering from, let's not forget.
Right.
And they drive up prices for everyone, which feeds right back into that inflation problem we were talking about earlier.
Right. It all comes back to that.
It's all connected.
Yeah. This is making my head spin a little.
It's a lot to process, I know.
It's like a giant game of economic Jenga.
Uh-huh. That's a good one.
You pull out one piece, and the whole thing starts to wobble.
You never know which piece is going to be the one to bring the whole thing down.
And it really highlights why it's so important to understand these global dynamics.
Absolutely.
Because what happens in one part of the world can have serious consequences everywhere else.
You know, globalization, it's a double-edged sword.
Okay, so we've got inflation data that's looking better, but still a bit unpredictable. The Fed's trying to figure out the right move with interest rates.
Trying to strike that balance.
The possible government shutdown looming over everything.
Yeah, that's a big one.
And trade tensions flaring up again.
It's definitely a recipe for uncertainty.
It's a lot for anyone to try to understand, especially when it comes to their own investments.
I know it can feel overwhelming.
So let's bring it back down to earth for a minute.
Okay.
What does all of this actually mean for the average person out there listening who's just trying to figure out their own personal finances?
Well, I think the main takeaway here is that staying informed is crucial. But it's not enough to just read the headlines, you know?
Right.
You have to understand what they mean for your own situation.
So not just reading, but really processing.
Exactly. Connect the dots. See the bigger picture.
And figuring out how it affects you personally.
Exactly. And let's take that inflation data as an example.
Okay.
If inflation keeps cooling down, it could signal a change in the Fed's approach.
Okay.
And that could impact interest rates on everything you can imagine, mortgages, savings accounts.
Yeah, that's something people can actually relate to.
Right. It's not just abstract numbers.
Yeah, it affects your real life.
Exactly.
Yeah.
It's about the real world costs.
Right. The cost of borrowing money.
Yeah, or the potential returns on your savings.
It's not just theoretical.
It hits close to home.
And it's a good reminder that you don't have to be a financial expert to make smart choices with your money.
Not at all. You just need to understand the fundamentals
Right.
and how they can impact you.
The article mentioned that even with Friday's market rebound, the major indexes were still down for the week,
Yeah, that's true.
which is a reminder that the market goes up and down all the time.
Like a roller coaster.
And sometimes those headlines can be deceiving.
Absolutely. They can really play with your emotions.
So don't get caught up in the day-to-day ups and downs.
Exactly. Focus on the long game.
Have a plan and stick to it.
That's the key. A good plan can help you ride out those market fluctuations.
And a diversified portfolio is super important.
Absolutely don't put all your eggs in one basket.
Speaking of diversification,
Yeah.
the article mentioned some interesting activity in other asset classes.
Oh, like what?
Gold, for example, jumped up after that inflation report came out.
Interesting.
But it was still down for the week overall.
So up and down and all around.
Yeah, what's going on there?
Well, gold is often seen as a safe haven asset,
Okay.
especially when things are uncertain in the economy. When investors are worried about inflation or a recession,
Yeah.
they often turn to gold to try to protect their money.
So it's like a security blanket when people are feeling nervous.
Exactly. It's that familiar comfort in uncertain times.
And then there's the always exciting world of cryptocurrency.
Oh, yeah. Crypto never sleeps.
Bitcoin, for example, erased its losses after the inflation data was released.
Back in the green.
It's like it's always on a roller coaster.
Crypto's definitely a wild ride.
It's amazing how crypto reacts to the same events as the stock market,
Uh-huh.
but it often does its own thing.
Yeah, it definitely has a mind of its own.
Like a separate world with its own set of rules.
The whole different beast.
Crypto is still a relatively new and unpredictable asset class.
It's still early days.
And it's not clear yet how it will interact with traditional markets over the long term.
Yeah, it's a developing story.
It's definitely something to keep an eye on,
Absolutely.
but it's important to be careful and do your research before jumping in.
Do your due diligence.
It feels like we're living in a time of constant change and uncertainty.
Yeah, it's a fast-moving world.
Especially when it comes to finances.
The financial landscape is always shifting.
So much information coming at us from every direction.
It can be overwhelming.
How can people stay grounded?
Yeah.
And avoid making rash decisions based on fear or FOMO?
Right. That fear of missing out.
That fear of missing out.
It's a powerful force.
It really is.
But I think it comes down to focusing on what you can actually control.
Right.
You can't control what the Fed does or what someone like Trump might say.
Right.
Or how the market's going to react on any given day.
So much of it feels out of our control.
It can feel that way.
Easy to feel powerless.
But you know what you can control?
What?
Your own financial plan.
Okay.
How much risk you're comfortable with, and your overall investment strategy.
So focus on the things you can control.
Exactly. Take charge of your own financial future.
Yeah, it's about tuning out all that noise and focusing on your own path.
Exactly. And remember, knowledge is power. The more you understand about how these things work, the better decisions you can make.
Yeah, this deep dive has been incredible. I feel like we've covered so much.
Yeah, we've been all over the map.
From inflation and what the Fed's doing to political drama and trade wars.
It really shows you how interconnected everything is.
It does. It's amazing how something that happens over there can have such a big impact on us over here.
It's a global world. We're all in this together.
And it also shows why it's so important to keep learning.
Absolutely.
There's always something new happening in the financial world.
Always another twist and turn.
So here's a question for you to think about as we head into the new year.
Okay. I like
If the Fed does ease up on those rate hikes or maybe even cuts rates next year, what could that mean for other investments like real estate or gold?
That's a great question, and it's something investors should definitely be thinking about.
How would that change things for your own investment strategy?
Yeah, it's all about adapting to the ever-changing landscape.
This is why I love doing these deep dives. It reminds us that the financial world is always evolving.
It's a dynamic system.
And we have to stay informed and be ready to adapt.
Stay agile, my friend.
Thanks for joining us for this deep dive into the world of finance. We'll be back next week with more.
Looking forward to it.
Fascinating topics to help you navigate your financial life.
Until then, happy investing, everyone.
See you next time.